have a baseline to grow from and then be able to track.
WordPress made easy.
Drawdown, you go right back to basics. Go back to the basics. What are we in? Are we in a bullish day or a bearish day? I want to focus there. What time of the day am I looking at? Okay, I'm going to wait till it's really easy for setups to form. What does that sound like in ES? What's the easy setups? What's the silver bullet for fixing drawdown ICT? You've been talking a bunch of shit here, Al, and it might be entertaining for me. I might have chuckled a few times, but get to the brass tacks already. Tell me something. I've sat here and listened to this shit for a little while. Give me something to go home with. Okay. When you're in drawdown, and you really simply just got to have the fucking trade that you can trust. That silver bullet trade that you want. Where does it happen? Where does it form? And also, how can I use this even when I'm not in drawdown, where it forms consistently? Where does it form, ICT? Come on, spill the beans, man. All this build up, all this bullshit, spill it. That's my cards. See that? I'm such a dick. Between 10 o'clock and 11 o'clock in the morning, New York local time, you will find a fair value gap that will deliver 5 handles every fucking day. Guaranteed, absolutely fucking guaranteed. It's never going to be a day, even on a shit show day like on Friday, it will always, always be there, aiming for an opposing pool liquidity, sell side or buy side. In my head, when I'm waking up, sometimes my wife prevents me from getting in front of the charts right at 9:30. Now, she's understanding because I've been mentoring you. The days I tell you I'm going to live stream, she graciously gives me that time to be here when I'm here with you. But sometimes we may be in bed longer in the morning because we stayed up later, or we may do something because of homeschooling with our kids, or something with the dogs. Something prevents me of being there at the 9:30 opening. I know as long as I get to my charts by 10 o'clock and I can stay there till 11 o'clock, I can take something out every fucking day. Every day, even on days that have the shortened holiday schedule, when they close it like at noon. Don't believe me. Don't take my fucking word for it, folks. Don't believe anything I just said to you, because I want you to go into your charts and you'll see it's always there. Absolutely. Guaranteed. 100%. It's always there. There's your silver bullet. There's your pass your funded account bullshit. There's your fucking win the Robbins Cup model. There's everything you're looking for. Between 10 o'clock and 11 o'clock, it happens every day. 1 minute, 30 second, 15 second. There's your 3 time frames. It will form in one of those 3 time frames. All you have to do is wait for the obvious run on liquidity. Is it going for buy side or sell side? And if as long as it's giving you at least a range of 6 handles or more, you'll get your 5. What does that mean? As long as that fair value gap forms on a 15 second, 30 second, or 1 minute chart, and you know where it's reaching for, it can be late in the move. I don't give a fuck. That's not chasing to me. Because a fair value gap, guess what that is? It's in the middle. That's where the meat is on the bone, baby. See, you're looking at charts thinking you have to have that end joint, high part of the bone or the low part of the bone. Precision is not limited to that. When you look at a chicken leg, okay, where's all the meat at? It's not on the ends. It's in the middle. It's in the middle. It's in the bulk end of one of those ends of the leg, but to the middle of the bone. And you get down to the opposite end, it's thinner. It's not a lot of meat down there. It's just a tendon down there. Nobody likes to eat that. A fair value gap is how you enter a trade that's in motion. Technically, to the uninitiated, the people that don't know how to read price outside of our circle, they look at what we do as, oh, it looks like chasing price. ICT, you did a revenge trade. Get the fuck out of here. You have no idea what you're talking about. You have no idea what I'm doing to get in those trades. None. You're learning this year, but it's not chasing price. If I know that this is going to run for liquidity and it's already moved and I missed the best case entry, and we've already had a fair value gap that it's repriced down into, it's not going back down if I'm bullish. It's already done what's required. Then I'm going to drop into 1 minute, 30 second, 15 second, and I'm going to look for a fair value gap. And the next one that forms, I'm in that bitch. Boom, take off. Get my 5 handles or even more, whatever the difference is between where that fair value gap is forming to the liquidity I'm aiming for. And I submit to that. I let it go. And then the algorithm sends it. And then I go on social media and say, wow, how random.
Feel comfortable with investing the time of walking forward with it.
Let's go. This May. Drax.
Takeaway is we were waiting for the 10 o'clock hour. This is that silver bullet that I was giving you in the Twitter space. Some of the newer folks are like, what'd you say? Silver bullet. What's that? Silver bullet trade, ICT, is a setup that will form every single day. Every single day it will form. And what you're looking for is between 10 o'clock New York local time and 11 o'clock New York local time. There will be a displacement in a direction that you should be anticipating. Once that displacement occurs, you're waiting for a fair value gap to form. When it does, you're going to be expecting that to be traded into and then repriced to a pool of liquidity that would be opposing your entry. For instance, what we're outlining here. We've already seen, a small minor delivery of it. I mean, it's been 5 handles or so since that run in here. But the expectation is for you to anticipate this formation in price every trading day. Every single trading day it will form, which is why I call it silver bullet. It's a move that will always be there. They will never be able to hide it from you. They're never going to be able to change it. Nothing's going to change it. It's always going to be there. There's never any reason for you to doubt that it won't exist. Okay. And it's also a way to train yourself patience, teaching yourself patience, sticking to a model and some rule-based ideas. And those being, you're looking for 5 handles. That's it. As a new student, as someone that's just now starting to become interested in the marketplace, it's a little intimidating, isn't it? Who do you listen to? Who do you trust? What do you waste your time on in the beginning and regret later on? And you want to avoid that. You want to go to the people that have the best stuff. You're thinking that there's a system or a teacher out there that's going to teach you how to never lose. They don't exist. I'm not that guy. So there's a lot of things that go through your mind when you first get involved in all this stuff. So I try to be as responsible as I can and say things like, you're going to practice in a demo. You're not going to trade with live funds. You're going to decide if you ever decide to do that. I don't ever tell you to do that. But I promise that you're going to see things in price that are very consistent. They're rule-based, structured approaches for you to go in and study like a laboratory experiment. If I was to say to you, go out there and find some random fair value gap and pick a sell side or buy side liquidity pool, and good luck at it. Right away, 90% of you are going to be like, what am I supposed to do with that? This guy's not teaching me anything. Versus, okay, if I tell you, you hear my stomach, I'm starving. 2 days fasted. So if we are looking at a time window, very specific time window, 60 minutes, okay? Inside of 1 hour, you can find a 5-handle run that's reasonably easy, in my opinion. And of course, my opinion is biased because I've been doing it a lot longer than you. But out of all the things that I teach, I think that it's visually easy to see a fair value gap. It's easy to see that. But it may not be easy for you right now. But it's easier to see that than a breaker. It's easier, way easier to see it than determining what order block to trade off of. You know, there's a graduation between one PD array and understanding it to the next, but you only need one. And if you remember, I set that 2022 model up with my daughter in mind. Like, I wanted to see her use that model, and I didn't want to see any excuse for her to say, well, I can't see it because the fair value gap jumps off. It's literally there in a chart, and even someone with a short span of attention, if I spent time with them going through charts and showing it to them, they could see it, and they could go in the charts and find it in hindsight. But they don't have the experience to see it forming real time. And that's what these live sessions, and that's what the Twitter experience with me is helping with. It does not remove the necessity for you to be looking and studying, not just on those instances where I'm taking your attention to, but other old moves, and studying that and seeing it repeat over and over again. My stomach is talking. But the silver bullet is a time-specific setup that forms between 10 o'clock and 11 o'clock. And I know you're already going to ask, why does it only work in 10 and 11 o'clock? Well, that's the morning session, silver bullet. There's an afternoon session that I'll teach you later on. You got all year, okay, all kinds of tricks to show you. But between 10 o'clock and 11 o'clock, what you're looking at is the last portion of the move that's going to unfold just for that AM session. And you're right in the heart of the move. And fair value gaps are generally forming after a move begins. There's an inception of a move that you missed. That's like selling short above old highs. You didn't get in it. You weren't able to do that, but you don't need that. Like I was teaching with the 2022 model, you don't need that to be able to do consistent setups. Between 10 o'clock and 11 o'clock, you are in the heart of the AM session move, which is essentially between 8:30 in the morning to 11 o'clock. It can go as far as noon, the beginning of New York lunch hour, but it's, again, a graduated thing in terms of time. There are macros that exist in price where between 9:50 and 10:10, in that 20-minute period, generally you're going to see a price run that begins within that 20-minute span. There's people out there trying to teach my stuff already in their little mentorships or their thing in Discords and such, Instagram. And they're already trying to say the move happens between 9:50 and 10:10. You're already doing it wrong, so stop trying to teach my stuff. The move begins in those 20 minutes. It's not the entirety of, I mean, obviously it can, in a fast move or fast market, it can do that. But what you're looking for is a run that begins between 9:50 and 10:10. That's the macro. It starts doing its run between those two time windows. There's another macro that exists at 10:50 and 11:10. There's two macros that start in those two hours. The silver bullet is specific to the 10 o'clock to 11 o'clock hour. And what we're looking for is an obvious pool of liquidity that has not been tapped into or engaged, which I've mentioned, obviously, with the lines here, you see it. You're not demanding that you capture the daily range. You're not demanding that it goes to your technical target. You're only expecting it to give you your 5 handles. Big paradigm shift there, because a lot of you also are taking this idea and trying to make more of it than it really is. Will there be times when that move is a significant higher low of the day and it just keeps on running? Yes. But in the beginning, you don't know when these are going to be there. You don't know what that criteria is to cause that. That's a whole lot of other things that you have to learn progressively over time. So I'm reminding you as gently as I can to stick to the rules I'm telling you to stick to. And that way you won't be taken into these false expectations that it's going to do much more than it's designed to do. Case in point, fair value gap, I told you that we extend that forward. When it was bumping up on the bottom of that, here, I was looking at the 5-minute chart. I thought it was a 1-minute chart because I was busy talking to you. I said I would go short there with the expectation to run lower. If you see that price there at 78 3/4, that's better than 5 handles. Did it take the sell side? No, but that's the structure that we used for draw and liquidity. Remember, I teach partials. I teach that you have to pay yourself. I teach you that it's just a way for you to frame your expectations on where the price should gravitate to. So go back up to a 5-minute chart real quick. So here's the low I was anticipating a draw to. Fair value gap here on a 5-minute chart as it went up into there. So as we hit that, if it were not seeing these relative equal lows here, we didn't have the relative equal lows, it was just one singular low, that would be an aggressive entry for me, and it would be where I told you. And it delivered immediately, as I said it, attacking this short-term low. It offered more than 5 handles. That would be it. Now, compare and contrast. I know some of you probably already in this trade, and you were probably holding on for this sell side, and this probably just ripped against you. Don't take the trades. You're learning how to read a tape. Everything I just explained to you has not been explained anywhere else about this type of setup between 10 o'clock and 11 o'clock. You didn't have that insight before you pushed the button. You had no idea what you're doing. You're impulsively trying to do something based on what I'm saying real time, instead of learning the lessons from watching and listening to what I'm expecting, what rules are there, what parameters are there. You can't learn doing what you're doing by pushing a button. You can't do that. You have to learn it and then go practice with it. Go look for it in old moves. That's the order of things. You don't learn how to do it by listening to me and trying to do it as I talk about it. That's not how you learn. So anyway, the delivery of 5 handles, that's the easy, absolute, 100% guaranteed time-specific setup that if you're a brand new person or someone's coming to this channel for the first time, a setup that forms so consistently, so routinely, there's so many things that are inside this model, and it's a complete model. It's an entire model in and of itself. Think about what it's offering. You don't have a whole lot of time? Okay, no problem. You want to do this while you have your day job? Does your job permit you to have a lunch hour early in the day between 10 o'clock and 11 o'clock? Because if so, I would take my lunch then. That way you're not stealing time from your employer. You're being a good steward. And your time won't be divided, or your attention won't be divided during that time, because you'll be expected to do what you're being paid to do by your boss, instead of watching candles form on your charts. If you are looking for a way to not spend so much time in front of the charts, which I can tell you is a good thing because it's fatiguing over time. I don't care how much money you make, it's still very fatiguing to do it. It will wear on your eyes, it will wear on your back, it will wear on your body and your stress. So you want to kind of keep it to an optimal level. And I can't find a way to be more optimal than a 1-hour trading workday. Between 10 o'clock and 11 o'clock, you absolutely know that this formation is going to be there. It's going to be there. Now, does that mean that you're going to have a winning trade every single day between 10 and 11 o'clock? Absolutely not. Absolutely not. It just means that you have an opportunity to have something that statistically is there all the time. And I don't want you to take my word at this. I want you to go back and look at every single trading day you can have data on and go through and see it's there. Now, what you need to practice is understanding, as I mapped out this morning, You don't need to be right about your levels. You just need to be right about, does it offer the range? Does it offer something better than 5 handles? Because if it can move better than 5 handles, chances are you probably will get 5 handles out of it. What do I mean by that? When we were looking at this fair value gap here, and it was bumping up and against it here, I said, okay, if we didn't have the relative equal lows here being specifically this low and that low, what was my apprehension? Because this could be a run lower, take the sell side out, and then rip higher and complete that new week opening gap high here. So it's not a singular low, it's relative equal lows. So there's going to be sell side below that. So they went down below it, yes, but I wanted to see this low taken out. That was one I would have been preferring rather. But an aggressive entry would have been right here. Did it offer 5 handles? Sure. Did it get to the sell side? No. Does it mean rather the model's broken? No. You're operating inside these rules with the expectation that it's going to offer you 5 handles. You might not get it. It might be an instance where you're watching price and you expected to do something like I would, what I was looking for, and it might not deliver it to you because your parameter, your entry, your limit order didn't get tagged in. You can't look at that as a reason to be upset. You can't be thinking, well, I wasted my time. How many 10 o'clock to 11 o'clocks in the future are going to be available to you? As long as you have breath, right? As long as you have your mental faculties and the markets are open, you have lots of those laboratory experiments to work with now. Will it take you 2 years to grow confident in using this as a model? I don't think so. But I think about 2 to 3 months is realistic because you want to see previous data to confirm what I'm suggesting to you is valid. Then, when you see all that, then you'll feel comfortable with investing the time of walking forward with it, tape reading it. And you do that for several months. That way, when you're bored of it, and you see it, you're not emotional about it, not nervous, not excited because it moved in your favor. You're just completely indifferent to the outcome. That means you're bored. That is the only time that if a trader thinks like that, then they can entertain the idea of maybe putting real money at work. But that's a decision that you determine that. And when is it going to be where you're bored? It's all completely objective from your perspective only. And it would be foolish of me or anyone else trying to be a mentor or a teacher to say you're ready when this and this. No. The only defining determination is you know that you're not emotionally stimulated by the outcome. You're not chasing a feel-good movement. You're not trying to replace a bad experience with a good win. And you're just following the rules. And that's a very hard thing for you to understand, especially if you're new, because you don't even have any rules. You don't have any experience. You haven't seen this form in previous data enough times to know that what I've said it exists every day. Between 10 o'clock and 11 o'clock, identify liquidity, find a fair value gap. The fair value gap has to be opposing, in other words, opposite to the direction that you anticipate the liquidity to be drawn to. For instance, fair value gap after displacement lower, we wait for it to trade up into the fair value gap and then trade towards a pool of liquidity lower in the form of sell side. If you're bullish, you're looking for the market to trade higher, displacement higher, leave a fair value gap below market price, then trade down to the fair value gap, and then gravitate towards a pool of liquidity, which will be buy side that hasn't been engaged yet, and it has to have better than 5 handles in terms of the range from where you think it might get to. Not that it needs to get there. Remember, I'm teaching you how to look at price, removing the necessity of being right, because right is not, it's not a destination. Being correct is not a destination. Excellence in execution is, and it has a very small population. The only way you get to be a member of that is by doing the things I'm telling you to do and avoid the things I'm telling you to avoid.
Template you're going to be following probably for that week. That's it. I just gave it to you. And if it doesn't pan out, you just eat it. It's a loss, like anything else. It's a cost of doing business. But you're going to find that it's almost like fucking fortune telling. It's weird. It's weird how it just pans out. But it takes a lot of courage to see that and experience. You're not going to be able to just look at it and say, "Oh, I figured this out. It's going to be so easy." You got to do this. This is a lifestyle, and you'll learn. And then I went to studying how I can do this on an intraday basis. So I had intraday templates or market profiles or little tendencies for the market to do certain little patterns and delivery of price. I put it in that type of format too. And you see that in the day trading portion of the core content. So I'm looking at days with the expectation it's going to deliver a certain way. Now, I'm not saying I'm 100% right. I'm not even claiming to be 90% right in that regard. But I know if I fall victim to a intraday profile that I'm trying to trade, if it fails, I know which one it's going to go to if I fail there. And it's a matter of experience and knowing how to navigate that. But narrative is knowing how it's going to use one of those templates. And that's what makes this complicated. And it's easy for people to say, fuck this, it's too hard. He makes it complicated. No. If you want laser guided precision, it's going to take some fucking effort, and it's going to put some wrinkles on you. Okay, it's going to gray some of your hair. That's just what I require because that's the way I'm wired. I want something that's next fucking level outside the reach of the common person or trader. That's why when you see me executing, that shit is next to flawless. And you can't get those results with this retail horseshit renamed. It doesn't exist anywhere else. It does not exist. And these fucking jokers that say, oh, it's supply and demand. It's not supply and demand. The things I'm teaching you are highly specific. They're very specific. It's not an open range that you fucking figure out where you're going to be buying or selling at. Here's your zone. Where are you buying in that zone? Sam don't even teach you that. Sidon. So that logic, well, in its infancy, is better than support and resistance, but it's still lacking. And you have to be precise about why are you buying here? And if you don't know where you're buying and why you're buying it, how the fuck can you put your stop loss in an effective place and know that it ain't going to get hit? Look at the trade examples I show you. You see, oh, he's got a $3,000 stop loss there. Whew, that's a lot. Look at the profit target. It's always more than 3. Always more than 3 times. Sometimes more than that. Sometimes 5. Sometimes 10. Don't get caught up with the numbers. Look at the logic I'm showing you. Why I'm putting my stop loss where I'm putting it. It's exactly how I teach it. The algorithm's going to respect that. You see, oh man, he's putting a stop loss right there. I couldn't do that because you haven't been doing this long enough and you haven't adopted what? The experience of seeing it. I've handled this stuff for 30 years. I've been in it for 3 decades. I've seen this shit pan out so many times. I know how to trust it. And if I lose at it, it's not a big deal. I know that it will repeat again. And if I took a loss, I can get that back easily. It's easy. Losing is hard for a neophyte. It's impossible to get through a losing set of trades as a new student. You need to be around other people to say, hey, look, I've been there too. And that's one of the benefits of being in a community like this, because I don't want you all to simply saying, here's where I made money. High five, ICT. That's cool. A lot of people like to see that. I like seeing it. It fluffs my ego. I ain't going to lie to you. It feels good to see my students doing well. But I also really want to see folks share where they're fucking up, what they're doing wrong. Because not only will it be an opportunity for you to get me replying to you saying, you did this incorrectly and you should have been focusing on that. You'll learn from it, and other people will learn from that. But you're all afraid to show what I opened this whole presentation out with. You don't want to show your weaknesses. You don't show where you've done it wrong. And that's where the learning occurs. You don't learn anything when you did it right. That's sugar-coated. That's candy-coated bullshit. You're not going to constantly win. You're going to lose. And how are you going to take that? Are you going to lose your shit and lose your mind about it? No, I got to go back in right away and do it. Male and female. I can appreciate a good-looking guy, and I can appreciate a good-looking woman. And some of these folks that I have as students, they literally have nothing wrong with them physically. They look, by all standards, they are attractive. They're successful people. They're doing well in their careers, and they're doing well in trading. But they're being plagued by not being balanced by having a significant other. And then because of that loneliness, they go into the marketplace and they push the button to do what? To feel good. They're allowing their personal life to manifest itself in trading. You cannot look for a feel-good experience in trading. If you treat it like a massage parlor and looking for a happy ending, don't be surprised if you end up with STD. It's as simple as that. You can't do those types of things. These markets will literally take you out. They'll make you second guess everything, remove all sound logic, and you'll lose control. Like a drunken, promiscuous affair on the weekend that your spouse doesn't know about. You'll be in there doing stuff you shouldn't be doing. So why invite it? Why live your life like that to allow manifestations of those types of things in your trading? Folks, this is your business. This isn't a game. This isn't a hobby. If it is, you're doing it fucking wrong. You're doing it wrong unless this is your business and you're minding your fucking business. You're going to fail because you are competing against yourself. And if you haven't removed all the toxic things in your life and found coping skills to allow yourself to be fruitful, balanced, productive, disciplined, do this, don't do that. If you can't do those things in your personal life, you sure as hell ain't going to do it in trading. Who's managing you? Who's your boss? Who's going to reprimand you for losing money? I am honest about where my limitations are, and I have no bones about saying this is where my weakness is. My weakness in my trading is always my exits. I'm never satisfied with them. Does that make me poor of a trader? No. It means I'm honest. It means that I do have weaknesses. I just don't know how to make them better than they are. And when you have frailties, you have to embrace them. Don't try to hide from them. Because the fact that you're trying to hide from them is the same thing that causes everyone to have drawdown, blown accounts, because you're trying to do what? You're trying to avoid that losing trade. That one singular event where it's now taken something from you. You're trying to avoid that. And the fact that you're trying to avoid that singular transaction turns into a series and chain of them, then your account's blown. Because you've ramped up your emotional and psychological impact. You've done that to yourself. That singular trade that was a losing trade, you made it now more significant. That trade cheated on you. That trade went outside of the relationships and the boundaries you set for it. And now you feel betrayed. So what do you want to do? You want revenge. You want to go find that motherfucker that cheated on you. And you go out there and you go into the marketplace looking for him. And you don't find them. You find somebody else. And they take again from you. And they take again and again and again. And you're hurt more each time. And it revs up that emotional and psychological impact. And you want it to go away. You want to feel victory. You want to feel like you've done the right thing. Because if you win, you've done the right thing. In your mind, that's what you're going to tell yourself. If you get the money back, you've done the right thing. And you didn't learn anything from that. When you should have said, stop it. This hurt me. I'm going to take a step back and heal. I'm not going to be in a rush to get into a new relationship, a new trade. But it's not comfortable waiting around for Mr. Right or Miss Right. Hardships. You're going to have issues where, you're going going to feel like you got it figured out. You'll have a week or two, maybe even a month, where you just did everything right. And this is where you get in trouble, young men. You think that you got it all figured out, and then you have a losing trade. And it might not even be a significant loss. It might be something so small, 0.5% or whatever. You save the stop from getting hit full on. Like you had a 1% risk or 2% risk, and you saved it from getting knocked out, but still it's a loss. Now, you're not looking at the fact that you were able to mitigate the total 1 or 2% hit to your account because you protected the stop loss. You saw it was going to turn on you. You closed it before it went to your stop. That's commendable. That's a skill set, not to promote the idea of paranoia, but if you're beginning to trade with live funds, if you do that initially and you are aggressive about cutting your losses, that alone would probably keep you alive long enough to find a way to grind through the adversities. Because when you get a real good winning trade, it doesn't wait around. It just takes off. It just runs. But the problem with this business is you want to second guess yourself so much because you're trying to avoid losing. This is the number one characteristic of a losing trader. You're willing to hold on to a losing or questionable trade. Come hell or high water, you'll hold that. It isn't moving like you wanted it to, but damn it, you're not letting go of it. Because what happens if you close it and it runs in your favor? What happens if you're fucking wrong and you just held on to it too long? That's what usually happens. See, if your trade is right, it's going to show you right away. Well, the perception of others about them. That's what they're trying to have new equity highs in that. And that's the problem. When you go out and you start challenging people, especially people that's been doing it a long time, and you can't bring those results, that will rattle you, especially if you're a male. A male takes that personal. Again, it's like you're saying that they aren't that large downstairs. That's how they'll take it. That's what it feels like for a man in trading. If they are sizing up with someone else or someone else is calling them or tapping them on the shoulder, that feeling of, I got to live up to that. Because what if everyone else thinks that I can't do this and can't do that? And then what they do is they start doing things that they can't really do. And they are regretting it. MyFX books, announcing they're going to do funded challenges, all that kind of stuff. Don't do those things. If you don't do those things, I guarantee you your results will be phenomenal because you're placing no image in the results. You have no expectations held of yourself. You're not saying, I have to hit 20%. I got to do 10% a week. I got to do 100% in a month and a half or 2 months. All those types of goals are stupid. If you haven't been trading for at least 3 years and you're trying to do stuff like that, you're really making it more difficult than it needs to be. Versus, what happens if you just try to make 2% a week? Would you be happy if you had a funded account with, I don't know, $100,000 and you tripled it over the course of a year? I mean, how many of you would be like, fuck you, I don't want $200,000. Are you crazy? $200,000? What the hell would I want to have $200,000 for? That's insulting, ICT. Why would you even ask me that? That's what some of you are basically saying without saying those words. Because you want to double your account every month. What would $200,000 a year do for someone like yourself? Would it change your comfort? Would it make things a little bit easier? How about get yourself out of debt? Well, you don't have to work very hard to get that kind of result. It's very small little micro moves that you have to do, but when you make them for the week, you have to stop. Don't place any more Olympic feats on top of you. Don't try to live up to everyone's expectations of, hey, you're an ICT student, you should be out there killing it like ICT style. No. One good trade a week. Do it and be done. It's about making money. It's about making money, folks, okay? It doesn't matter how many little hearts you get behind your Twitter posts or how many fanfare you get from all these other, I don't even know how Instagram works. Whatever that stuff is that would fluff a person up. Those things don't matter. Making fucking money does. Paying your bills does. Being able to eat. Taking care of your family. Paying your mortgage off. How about getting a house without a mortgage? Paying your car note off so that way you don't have to make any payments. New set of duds. Clothes. Doing something for someone that wouldn't expect it. Those types of things. That right there, that is a real motivator. Coping skills, going through the processes that I've taught in great detail on my YouTube channel. But the problem is, you're one of those individuals that want ICT to get right to the point. The point is, you don't listen. That's the point. The point is, you don't fucking listen. You're not trying to take good advice, and you just want to do it your way. You want Burger King fucking mentorship, okay? Have it your way. Well, have it your way mentorships don't make millionaires. That's the way that works, okay? It creates emotionally charged traders that hold on to losing trades too long. And then when they fail and blow up in your face, that creates that loser cycle where you want to try to get it back right away. You know what that means? You're going to lose more fucking money. And it just keeps repeating and repeating. And then finally you blow your account. And then what happens? You beat yourself up because you're going to look at the trades and say, why the hell did I even do that? There was nothing in the market. Why did I buy that? There was no fair value gap. There was no order block. It didn't even take sell side liquidity. What the fuck was I doing? You're chasing emotional charges that you put behind that decision. You completely abandon all reasoning and why you even are trading. You're not the only one that's done that. Everybody does that. Everybody does it. Why? Why is it so hard? Because you're competing with yourself. You have to live with yourself. You have to wake up in your own skin tomorrow and the day after. And the decisions that you make today and yesterday and what you'll make tomorrow come with consequences. And see, you want consequences to be sugar-coated, almost orgasmic in trading. You want them to be happy endings. Not to sound crude, but that's what you really want. You want a chance meeting with a stranger and a knock on your bedpost. That's what you want. You want every night to be a one-night stand and it's all good, feel-good moments. I'm sorry. Sometimes you're going to wake up next to a hand grenade, and that's just the way it is. And you are going to hurt yourself. But you got to say, look, you know what? I got pip drunk. I made some poor decisions. Thankfully, I'm not married to this person. And just slip out before they wake up and just live on, continue to trade and try not to do that same thing again. This goes for both the ladies and the men. You know what I'm talking about. Somebody just whispered, I just did that last weekend. How's he know? I'm watching. I got my eyes on you. But the reason why it's so difficult trading is because you're competing against a fucking savage in the making. You are such a formidable adversary that you alone are the one that's holding yourself back. Nobody else is holding you back. These yahoos on the internet that say what you're trying to learn doesn't work and all this, that didn't stop you. People commenting saying, oh, well, you're doing this and you're doing that. This is the real way of doing it. That doesn't motivate you to go chase that stuff. You're sticking to this. But you're the adversary. If you take the energy that you place in worrying about stupid shit and people that don't matter, and you apply it to yourself and how you can build yourself up so that way you could be useful to yourself and your friends and family that are worth being around. Yes, I said that because there are family members that you shouldn't have in your small circle. And when I cut those out of my life too, man, happiness. Because I'm going to tell you something. When you start making lots of money, your fucking family does not like that. They don't like that. They're going to look at you and say, you know what? This motherfucker here. You know, I never noticed this bitch has an ego problem. Look at him. He's buying these cars. Now, I didn't drive my car over to their house. I didn't say, this is how much I pay for my car. They just found out I bought these cars. This motherfucker, look at him. Now, these are my family. I'm a young guy. I'm trying to do what makes me happy as a young man. And I had family members literally get a case of the ass because I was enjoying what I was able to do. Your friends, don't be surprised if they don't like the fact that you're successful. And they're going to be spiteful because they are too fucking lazy to do the same things that you're willing to give yourself a chance to work and grind through. Success is not something that falls in your lap. You got to work for it. And that means that you got to take your attention away from stupid, silly shit and stupid, silly people and apply it to hard work and be diligent about it and show up every day. And when you do that, results will come. And you're going to find out who your real friends and family are. Because the ones that really love you, they're going to say, you know what? If anybody was going to do it, it was going to be you. And I'm so proud. Look what you've been able to accomplish. That's amazing. Can you show me what you did? Not, look at you, motherfucker. You think you're better than me? Hey, if you got all that money, why don't you give me some? I heard more of the latter than the first. Why the fuck are you going to let people that are not successful tell you how to live your life and give you advice? Or if they tell you something, why are you allowing that to drain you or make you doubt what you're doing this for? If they're not better than you are in success, have more than you, earn more than you, and able to do what you're doing right now better than you, their fucking opinion doesn't matter. Love them from a distance. That's what I did. I didn't disown them. I just simply did not invite them into the conversation of my personal life, how I should live it, and what I should do with my personal wealth, period. You didn't help me. You didn't encourage me to make this fucking money. You sure as fuck are not entitled to tell me how to spend it. People that don't matter. Now, out of context, that would sound like, damn, this guy's arrogant. No. I'm being real. If you were in my situation, that's how you would think about it too. Whose business is being ran here? Mine. Nobody runs my business. You didn't build it. You didn't take the risks to grow it. You weren't there to console me when I was low on my accounts. You weren't there to encourage me to say, hey, keep going. None of that was seen by my family members. None of my friends did that either. And you're going to experience the same fucking thing. And guess what? Relish in it. Because when you get it and you arrive here, you got there on your own. None of your fucking friends and your fucking family members can say, we did this for you. We helped you. No, you didn't. You did not do any of that shit. I had to persevere just like you are. And let me tell you something. You can call this arrogance. You can call this ego. You can call it pride, whatever the fuck you want to call it. Okay. I call it conquering demons, because I had every night whispers and doubts coming in my head all the time. What if I really can't do this? What if I can't? What if I fail? What if I have to work the rest of my fucking life? I had to go to bed thinking about that shit. You know what I go to bed thinking about now? Man, I didn't have to do this today. Man, I didn't have to do that today. I look around, I see everybody else flipping out, driving around, losing their fucking mind. Traffic. I don't have to go through that. I don't have to go through that. I'm 50 years old. I don't have those cares in the world. And I want all of you to have that. I want you to have that. That's not privilege. Let me tell you something. I had to work my fucking ass off for this. I had to work. I had to work to make this work for me. It's normal. That part is normal.
Yeah.